This is Matt Shaw, Trade Till You Lose, and we're explaining just exactly what a pip in Forex trading actually is. Now, a pip is short for a point in percentage. That's the acronym, point in percentage. It's a small measure of change in a currency pair. We've got pound yen here as an example, and it's a currency pair within the foreign exchange market. Now, it can be measured in terms of the quote or in terms of the underlying currency. So the quote here, we've got 146.08 to sell, 146.10 to buy, or obviously just in the pound itself and the yen itself. And there are certain ways you can measure it by taking into both currencies and doing several complicated conversions and mathematical equations, which I'm not going to go into. Don't worry about that. You do not need to know any of that whatsoever. All you need to know is this. One pip is a 100th of the quote. So it's, now remember in maths, you had one decimal place was 10, and then you had two decimal places was the 100th, and then three decimal places was the 1000th. Now, it's very simple. The 146 is the big figure here. So the main figure here on pound yen is 146. Okay, that's the same for sell and buy. Now, when we get into the after the decimal point, we go to the hundredths. Now, this number here, we got 07 to sell and 10 to buy. These numbers have to go up to 99 and then to 100 for this to change to 147. So once we see 146, 99.9, when it hits 100, it'll see 147, and then 147.01, 147.02. The same for the lower end. We'll see 146 flat, and then 145.99.9, and then lower and lower as we go. And then we've got the thousandth here, the very small end numbers that are called pipettes, and these only go to 10. Once they hit 9, as you can see here, 9.9, once that goes above, that hits 10, so it's 10.4. So think of it as 146, 10.5. 146.08, flat. 146.08, 07.9, and then 07.9, 08, etc. And that's that. So the spread here, when you hear people mention about the spread, talk about the spread on a currency pair, right here for pound yen, which on pound yen it's not traded as frequently, or is not as big a currency as say pound dollar or euro dollar. So the spread's a little bit more. So here we've got 146.08 to 10.3, so that's 2.3. So that spread at the minute, 146.08 flat to 10.4 is 2.4. 2.3, 2.4 is the spread. And that is that simple. So we've got, then check it out now, it's changing every other couple of seconds. So we'll go again, sell is 146.08.4 to 10.8. 0.81 to 10.5 to 10.6. So it's 2.4, 2.5, 2.3. But that's how you evaluate your pips and your spread. Now, when you look to trade these, as we've touched on in a previous video, we look at lots. So for instance, one lot will in fact be, for instance, roughly $10 a point. It does vary from currency to currency. So let's say it's roughly $10 per lot. Now, if you're looking to make 10 to 20 pips on a trade, so you buy in this market here, I'm not going to click buy. I don't want to buy pound yen right now, even though I'm looking right now here, and I'm hoping for a blue arrow to come once we break out here. We may do, but we've not seen a blue arrow yet, so I'm waiting for that. So once that happens, I'll look for pound yen to make, 20, 30 pips, all the way up to maybe 100, 200 pips. Now, if this was to make 100 pips, this would then turn out to be 147.10. And if it was to make 200 pips, this would hit 148.10 or 148.10.7. If this was to make 50 pips, we would go 146.60. 20 pips, 146.30. 10 pips, 146.20. So for every pip, remember, it's $10 per pip. Okay, so $10 is one lot. So when you trade one lot, that means, to be honest with you, roughly $10 a point. And if we're looking to make 10 to 20 pips here, for this to go to 21, 146.21, 146.31, that would be $100 we'd make for every 10 pips, or $200 for every 20 pips. And it works like that. And for the loss, if this was to, we were to sell here, we were making a loss. Every 10 pips we'd lose 100. Every 20 pips we'd lose 200. For every 100 pips we would lose $1,000. This is why starting out it's best to trade with smaller lot sizes, and we go through risk reward in another video, but you may look to maybe just trade 0.2, which would be then, you know, $2 per lot size, okay, or 0.5. It's a very common one when starting out, $5, which is a couple of pounds a point, £2–3 a point, and that seems to be about the average when starting out. So 0.5, you can go into the decimals, 0.05, and go right down to, you know, 50 cents a point. So for every 20 pips you'll make $10. For every 20 pips you lose, if this starts to fall, you would lose $20. And that's that. That pretty much is what a pip represents. Now, dollar yen, we'll see a slightly less spread here. So as you can see, it's 150, 110, 50.9, 151 to 252.6. That's 1.6 spread, as opposed to 2.4, 2.5 on pound yen. So 110.51 flat to 110.52.7. So that's 2.6, 2.7, sorry, 1.6, 1.7 spread. Okay, 110.51 flat to sell, 110.52.6 to buy. That's a 1.5, 1.6 difference in spread of pips. Okay, and that is that. Any more questions? Please get in touch, guys. Thank you very much indeed.